public sector stocks have been all the rage for the last so many months now. And even on a market which is down 200 points in the Nifty, that's the pack which is really charging ahead. Now, most of the interest, one has always assumed, comes from retail investors, small shareholders. But institutional investors, mutual funds are also getting behind this theme in launching schemes and attracting a fair bit of flow. Hormaz has looked at what institutions are doing and how many schemes and from which houses they're available. Hormaz, take it away.
So there are 4 such schemes that have been launched by fund houses that predominantly are focused on PSU stocks. Now, the 4 of them include the Aditya Birla Sun Life PSU Equity Fund, the ICICI Prudential PSU Equity Fund, the Invesco India PSU Equity Fund, and of course the SBI PSU Fund. Now, what has happened here is that there are some commonalities in all 4 of them. One of them being that majority of their exposure, of course, is towards equity. And I'll start off with the Aditya Birla Sun Life PSU Equity Fund. The AUM as of date is around close to 1950 crore rupees, and over the last 12 months this fund has returned 71% to its investors. Now, 91% exposure is towards equity, and the remaining 8% surprisingly is towards cash. So there is a cash holding there as well. Now, this is according to Value Research. Now, among the top 5 holdings, NTPC is the top holding with them, around 8% of their assets. Coal India is one, SBI is another, ONGC and Bank of Baroda form their top 5 holdings. Now, the interesting bit here is that SBI, despite being an underperformer, is one of the largest holdings in all the 4 schemes. Now, ICICI Prudential is the other one. The AUM around 2,000 crore rupees as well. Around the last 12 months, the fund has returned 61%, 91.6% allocation to equity, and 1.5% exposure to debt as well, and the remaining being a cash exposure. And here as well, SBI is the top holding. The last 12 months, India's largest lender has returned only 7% to investors, and yet it is the largest holding of this fund. 15% of their assets are allocated to SBI, and the usual suspects again, NTPC, Power Grid, Coal India and ONGC form the top 5 holdings here. The Invesco India PSU Equity Fund, it's the smaller AUM size, around 700 crores, similar returns, 62% over the last 12 months, 95% exposure towards equities and the rest towards cash. And here as well, NTPC is the top holding, and the addition here, the surprise addition here is HAL. There they have a 6.3% allocation of the total assets, and that stock has returned over 130% over the last 12 months. And lastly, the SBI PSU fund, which has an AUM of around 1150 crores, that has returned around 65% over the last 12 months, and around 97%. The maximum exposure among all the 4 funds towards equity is in this fund, and the remaining is towards cash. And as unsurprisingly, SBI is the major holding here, but the addition here is Hindustan Copper, which is 5.5% of the total assets. That stock has returned 120%, and BHEL, that makes an entry with 180% return, and it is 5% of the total assets of this fund. But surprisingly, neither REC nor PFC, 2 of the top performers of the Nifty PSC index, feature in any of these funds. Only 1 out of the 4 schemes has an exposure to PFC, and only 2 out of the 4 schemes have exposure to REC. So these are the 4 funds that are PSU focused, around 60 to 70% returns. The stocks have returned far more.
All right, Hormaz, interesting data there. And, I was hoping to see all these REITs and railway PSU stocks, etc., but it's kind of hard for them to be because we only looked at the top 5 or 6, right, holdings. So just by sheer weight, they'd probably, if they'd probably be somewhere lower down. But thanks very much. Interesting data on, institutional ownership. 4 funds, 4 PSU focused funds is what we have. Now let's actually listen.
For more news and updates, all you need to do is follow CNBC TV18 on all of our digital platforms.